A fresh altcoin watchlist is leaning on possible exchange expansion, but the useful question is access, not hype. Sui Altcoins' attention is rising because traders often look for mid-cap names before a wider listing cycle. The danger is treating a watchlist like a confirmation. No new Tier 1 listing is confirmed here, and no percentage pump should be treated as guaranteed. That matters because listing excitement often arrives before traders ask whether the network has enough real demand to justify the attention. The 5 names in focus are Stellar, Sui, NEAR Protocol, SEI, and Injective. They are not the same kind of project. Stellar is tied to cross-border payment infrastructure. Sui is watched for developer activity and scalable applications. NEAR focuses on usability and modular network design. SEI is built around high-performance trading infrastructure. Injective sits closer to decentralized finance and derivatives applications. That variety matters because one exchange access thesis can hide very different business risks. A cross-border payment asset, a smart contract platform, a trading-focused chain, and a DeFi infrastructure network should not be measured with one simple checklist. Exchange expansion can matter because access changes who can buy, sell, and provide liquidity. Liquidity means there are enough buyers and sellers for trades to happen without pushing the price too far. When a token moves from limited access to broader availability, more retail traders may notice it and more market makers may support trading. But visibility alone is not value. A listing can create a short burst, while weak usage can leave the asset exposed after attention fades. Broader access can also bring sharper volatility. More venues can mean deeper markets, but they can also bring faster exits when the first wave of interest disappears. Sui Altcoins is the strongest search phrase because Sui sits inside the developer adoption part of the basket. For Sui, the proof is not just a chart. It is whether developers keep building applications that need fast execution and whether users keep showing up after incentives slow down. For Stellar, the proof is payment usage. For SEI, it is trading activity. For NEAR, it is developer accessibility. For Injective, it is cross-market DeFi demand. That is why the watchlist should be separated by proof type. Sui needs developer evidence, while Stellar needs settlement evidence and SEI needs exchange-style activity. The risk is narrative compression. When 5 assets are grouped as early entry candidates, traders can forget that each one needs its own signal. A payment network should be judged by settlement use, not the same metric as a trading chain. A DeFi infrastructure project should be judged by real financial applications, not only social visibility. A developer platform should be judged by builders and product traction. Putting them in one basket can make the story sound cleaner than the evidence. The cleaner comparison is not which token sounds most exciting. It is which network can show activity that matches its stated use case after attention rises. This keeps the analysis tied to evidence instead of treating all infrastructure tokens as one interchangeable trade. The next useful check is confirmed exchange notices, not rumors. After that, watch spot depth, volume that lasts beyond the first excitement, and whether each network shows activity tied to its actual purpose. Sui Altcoins can be a watchlist theme, but it should not become a shortcut for buying a narrative. The stronger read is simple. Access may start attention, but usage and liquidity decide whether attention survives. If a confirmed listing appears, the first day is only the opening test. The better signal is whether spreads tighten, order books deepen, and usage survives after the promotion window.